Welcome to another question relating to consolidated financial statements. Okay, and today in this second question, basically what we are going to see is how do you carry out the analysis of profits, right? Let us first read the question and then I will explain to you as to what all is required. Balance sheet as on 31st March 2012 is given as under, you have the liabilities, you have H Limited, S Limited, then you have the assets, H Limited, S Limited, right? You have fixed assets, you have investments in 70% of shares in S Limited, which are reflected in the books of H. This means what? H is holding shares in the company S Limited, and how much are these? 70%. Current assets, you have creditors, profit and loss account, and equity share capital. Assuming the acquisition of shares took place on October 1, 2011, so the acquisition date is October 1, 2011, when the balance in profit and loss, which means what? This profit and loss account balance is on October 1, 2011, was rupees 30,000, prepare consolidated balance sheet. Now this is actually pretty simple, right? So if I were to just show you what is happening, we have a balance sheet of the company which is given to us as on 31/3/2012, right? And what we are also told is that the acquisition happened on October 1, 2011, right? On the date when acquisition took place, the balance in the profit and loss account is 30,000, right? And this is of S Limited, of course, right? So what happens here is basically you are told that you have to find out or rather you have to prepare the consolidated balance sheet. Now, whenever you have to prepare a consolidated balance sheet, there are certain defined steps that one needs to take, right? Let's prepare the consolidated balance sheet. I will just remove this from here. Consolidated balance sheet of H Limited as on 31/3/2012. If you want to write down completely, it is consolidated balance sheet of H Limited with its subsidiary S Limited as on 31st March 2012. So you have assets, you have liabilities. Let's see them one by one. On the asset side, you have first thing is fixed assets, right? So the procedure is simple. We start moving from the right side of the balance sheet. Let me just clear these signs so that we are once again actually we can just leave this one out here because this will be used for further analysis as well. The procedure is very simple, right? We start consolidating the assets of the company, right? So the first one is what? Fixed assets. We also need to look out as we move forward if there are any adjustment to these numbers. Thankfully, or rather because it's a too basic a question, you don't have many adjustments here. So fixed assets, H Limited 250, S Limited 150. Fixed assets, H Limited, S Limited, 2,50,000, 1,50,000, 4 lakh, right? So this is gone. Develop this habit that whenever you are marking out any particular thing, just put a tick mark on it. Investment in 70% shares of S Limited. Now, 1 lakh is the investment. As we had discussed in the previous video also, whenever you are given the investment amount, that is used to compute your cost of control. And how much do we own? We own 70%, right? Because we own 70% of the company, this means that the minority interest or the people other than the holding company own how much? 30%. Cost of control basically, as we had understood earlier, is nothing but whatever we have paid for the company, right? Which is nothing but our investment amount. Investment is 1 lakh. Less what we receive in exchange from that company, which basically comprises of your share capital and other stuff. So we'll see as we move forward what are the numbers for these. But because I'm telling you that we will be moving from the balance sheet side, so I moved from the right side. Then current assets 1 lakh, 1,20,000. Current assets 1 lakh, 1,20,000, 2,20,000, right? Again, let's go back to the balance sheet. Creditors 150, 90,000. Well, we'll just do a total of these as well. Creditors H Limited, S Limited, total goes to the outside column. 150 and 90,000. 240,000, right? Let's go back. Profit and loss account. Now, basically, whenever we are preparing the consolidated balance sheet, we are concerned only with the equity share capital and profit and loss account of H Limited to start with, right? And then we see we need to bifurcate the profit of S Limited into pre-acquisition profits, right, and post-acquisition profit. So I'll come to the profit analysis towards the last. I'll just place the two numbers out here which represents the equity share capital. So equity share capital of H Limited 2 lakh. Equity share capital in the balance sheet. Whose balance sheet is this? This is the balance sheet of H Limited. Therefore, the share capital which comes in is going to come only for H Limited. Please note, I have not included the capital of S Limited, which is this. Why? Because this will go to my cost of control. So 1 lakh is the share capital of S Limited. How much do I own out of it? 70%. So out of 1 lakh, 70% will be 70,000, which I own, right? And the balance share capital, equity share capital, is owned by the minority, right? So I will include it on the minority side, right? Okay, let's go back. Profit and loss account 1 lakh. This is of H Limited. So I will put in the profit and loss account. This will be consolidated profit and loss account, right? How much belongs to H Limited? 1 lakh. And now comes the main part of this question, which is how do you allocate this 80,000 of profits which belongs to S Limited, right? Now, as I had told you previously also, the total profits of the company, of the subsidiary company on 31/3/2012 are 80,000. Do we have some more information? Yes, which is that the profit and loss balance, the share acquisition took place on October 1, 2011, when the balance in the profit and loss account of S Limited was 30,000. On this date, the balance in the profit and loss account was 30,000, right? Now, what does this mean? This basically means that between this period, this 30,000 is balance on this date, which means that this entire profit has been earned prior to this date, right? And between these two dates, which is October 1, 2011 and 31/3/2011, how much did I earn? My opening balance or the balance on October 1 was this. My balance on these two dates was this. So obviously 80,000 minus 30,000 or 50,000 is what I earned between these two dates, between October 1 and 31/3/2012, right? Now I clearly know, right? Let me just go. For this, what we do is we prepare a statement which is known as analysis of